All right, everybody, welcome. So in this video, I'm going to quickly compare EMA and SMA because it is fairly important to know the difference. Although this is a very simple lesson, it's a good way to start to see what these moving averages are actually showing us. So let's create a new Python block. We have one here, and let's import Y finance, SYF. Import pandas as PD, numpy as np, and import matplotlib.pyplot as plt. Nice. Let's also enable matplotlib as inline so we can render that. Yeah, also make sure that you have these installed. Second one is really straightforward. We're actually going to fetch the data, so I'm just going to paste this in. So we're using Y Finance's ticker and history to get these ranges. And then we're only going to start using the close price. We don't want to look into the open, high, low for now. And we're just going to drop the null rows if there are any. And then we can also take a look at the head and see what our data actually looks like. So fairly simple, starting 2016, and we get the close prices. And that's pretty it. That's pretty much it. It's really straightforward. And then we're just going to calculate the SMA and EMA. So we have a calculate SMA function. So it takes a series, panda series for both. And the window size, how far back do we want to go back and create these moving averages? And then we just return those values. 6 is, step 4, I'm jumping ahead here. Step 4, we're going to quickly actually run these and create 2 new columns. We will call it SMA 20 and SMA let's do this, calculate SMA, and then we use df and then the close, and let's say we want to use a window of 20, and we will do the same, see, turn it back, and we'll do the same for EMA 20, where we do calculate EMA, use df close, and also a window of 20. That's pretty much it, really. We can also do df.dropNA again, because it could be that we have some null values. Perfect. And now let's plot this. So I'm just going to paste this few lines for plotting. We're essentially creating a figure, and we're plotting the data and adding a title, X and Y label, so the Y-axis, X-axis, and we add the legend for the plots, and then we show it. Pretty nice. So to be fair, maybe it would be nice to get a range so we can perhaps zoom in a bit more. So we're seeing an overview, but maybe let's just start this from the beginning and just jump straight to 2022. Or even 2023, and I'm going to restart and run all of it again. Perfect, perfect. You know what, let's go even leaner. I could be filtering this on the plot level, but I just want to keep it easy and run it from the start. Great, great, great. So EMA is green and SMA is 20. And the blue is the close price. So they're all moving averages and they're pretty much behaving the same. However, they have different sensitivities. All right, really super simple. The EMA is slightly more sensitive to local changes and more broad changes overall. So as the price ticks up, the EMA starts reacting more sensitively to that uptick and it starts leading with it. The SMA is a little bit heavier and takes a little bit more time to actually catch up. Not that much longer, but still slightly longer. and it's not phased as much by local changes to the price drop. So it's been, for example, 2-3 months of uptick in price, and then we'll have a sudden drop for 2 to 3 weeks. EMA will react to that, whereas the SMA keeps a baseline where it is flattening, but it's not downtrending, which is great for capturing noise, essentially. So you want to make sure that you're denoising something, use the SMA. The EMA is a bit more sensitive. Okay, now you can also use these two as for a crossover strategy. Detect when the EMA is crossing the SMA to alert yourself, all right, well, we have an uptrend here and we're getting a downtrend here. So you could use these for trading strategies. Now remember, the SMAs and EMAs are lagging indicators, so they are always looking backwards. But for more advanced lessons, I can show you how we can add some models that actually help us look forward with this type of data, so we can actually make these predictions ahead of time. But yeah, so pretty straightforward on why we should be using these and how we can use them essentially to look at momentum going up and momentum going down. I'll quickly add a little snippet I have here for a crossover. So we're just checking, so we create a signal column and we're checking if EMA is larger than SMA. We basically set a 1, else a 0. And yeah, pretty much that. Also, because we have a window of 20, we're skipping the first 20 because we need the first 20 to actually create this data. So yeah, let me run that here. So you can see for the first few days, there's not much of a signal. And we can also visualize that again. Let me paste that here. Again, so we have a figure, we have plottings, and we add a scatter for the buy and sell signals. Let's see if we even get any. Perfect. So pretty simple. We get buy signal, and then we have sell signals based on exactly what the EMA is doing to the SMA. So we have a long trend, and then we have a temporary short. So closing might indicate yes, but actually it is going up. So sticking to long here is also super important. We can also add filtering for behavior like such as you see here, where it's really flat, although directional but flat nevertheless. A lot of noise here, as you can see, and then as it goes on, it becomes sort of much cleaner to trade these signals. So yeah, but essentially, if you are ranging, also you can implement some mean reversion where these signals can work in opposite directions as well. But yeah, this is just a simple, quick look at just these moving averages. I hope you enjoyed that. This is, I think, lesson 2 now, and it's just fairly simple. But I think we're going to get started with some more advanced stuff. So you can see here, I already made lesson 1 yesterday. We're lesson 2, and I'm going to start adding more and more lessons as we go through. So yeah, thank you for watching.